Okay, good morning, everybody. First off, thanks all of you for joining us today and tuning into our webinar. There's a ton of information we're going to be providing you with today. It's going to move really quickly, but not to worry, at the end, we will let you know how you can get a copy of all this information. My name is David Port, and I'm the president of Port Communities. And along with our partners at Fabric and Hudson, we are developing the Habitat Project. Here with me today on the webinar is Jason Lowe of Altus Group, David Knight of Colliers, and Ben Amsleg of Framework. Today we're going to be taking you through a tour talking about the strength of the Vancouver real estate market. The best way to do that is to put some context around it and give you some context of what's happening in the economy and what's happening in the overall real estate market. And Jason from Altus is going to be doing that for us. Jason, take it away.
Thank you, David, and thank you for the opportunity to be a part of this webinar today. I'm going to start off with a macro overview just to provide a backdrop to put the Vancouver market into perspective before I drill down into that. This is a busy chart, but if you can sort of look at it and what you can see here, it's interesting, and I love this chart actually, and notwithstanding the fact that it's busy. But if you look at it here, I think the important part to look at here is that it's been 12 years since the last incentive for the market was introduced, and yet throughout all that time, the market's not just performed, but it's actually grown to record-breaking levels. Since the onset of the pandemic, other than the initial impact, similar to what we've seen in previous slide, when new policy controls get implemented, there's a bit of a slingshot effect, albeit we're in a different circumstance today. While immigration, as a key driver of the housing market demand, has dropped during COVID, the Canadian government's recent announcement to increase immigration to 400,000 will hopefully help offset this in the future. While the pandemic has no doubt impacted employment, what's important to note is that in BC, 32% of that particular impact was in the 15 to 24 age bracket. As such, one can assume that there has been little to probably no impact to the home buyer segment. Now, just continuing with that said, month over month, employment has actually expanded with the loosening of restrictions, but the second wave impact will obviously determine how this continues to trend. That, in conjunction with Canada's low interest rates, which are likely to stay with us until 2023, Canada's likely to follow suit with the Feds in the US to allow for more leniency, looking at an average of 2% inflation, for maintaining low interest rates for a more conservative approach and to help balance the economy. Now, while our firm survey that we conduct every quarter showed a decrease, which you can see there, of home buying intentions, and this was done in the summer of this year, it's likely a reflection of the emotional sentiment that impacts everyone during these unprecedented times. But important to note that obviously during these times, there's also in terms of disposable income, there's less spending as a result of the significant impact that the restrictions have had, thereby potentially increasing capital availability for home purchasing, as you'll see later reflected in the next slide. The demand in starts and sales continue to reflect resilience this year, thus far, particularly in single-family housing. The ongoing affordability and supply issues, coupled with the work from home, which I'll further point out later, has made the most affordable built form to accommodate new needs during this time, with some definite permanent changes that will obviously stay with us. Now, on a first half 2020 year-over-year basis, we continue to see low inventory levels in the East, with an increase in the West, and again, this is for the first half of this year, as a function of obviously slower sales. We'll see later on how that in Q3, this has already started to pick up. Now, in looking at the tale of two cities, Vancouver and GTA, as I like to call them, the demand and supply constraints are trending in the opposite directions, with declining condo apartment demand in Vancouver and continued supply constraints in the GTA. Now, consequently, average condo pricing is converging between Vancouver and GTA accordingly. But you should note that with respect to the average pricing in Vancouver, a lot of that is driven by the sub-areas of the sales composition for Vancouver, as we'll also see later. Now, drilling into the Vancouver market. For Q3 year over year for this year, there's been an increase in quite frankly, and this is exciting, the highest activity reported since Q4 2018. This is reflecting obviously strong improvement on the activity following COVID-19 restrictions loosening, with most of the sales actually occurring in the latter half of Q3. This has been primarily driven by the sub-areas of Burnaby, New Westminster, Tri-Cities, and Fraser Valley for the most part, which is addressing that earlier point that I made in terms of the house price values being driven by the composition of where these sales are occurring. And it's also driven by, in terms of built form, an increase in single-family home sales. Now, naturally, the increase in sales for a second consecutive quarter has thereby resulted in a decreasing new home inventory in the new home sector. And as we look at an average blended price per square foot at the time of project launch, that's also up for single family, choppy, but still stable for condo apartment, as you can see in the charts. Increasing prices in condo apartment is a basic function of economics 101, right? It's supply and demand, as seen in the chart, relative to decreasing supply in Q3. Now seeing that turnaround from the first half of 2020, as I mentioned earlier. This is clearly evident in the case of single family price changes with the Q3 increase and decrease of sales and supply respectively, as you can see in the chart. The resale market, looking at that for a second here, is trending the same way. No surprise, and with an increase in sales in Q3 2020 for very much the same fundamental reasons and principles as I just talked about in the new home market. With the increasing sales and the loosening of restrictions, and actually more listings have increased to fulfill this demand in the market. As a result, the benchmark resale home prices based on the home price index that Altus actually powers for the Vancouver Real Estate Board is also increasing. And from a total market perspective, the good news is that in both resale and new homes, when we look at it overall, sales are up 17% on a year-over-year basis for Q3. Now, looking at condo sales, while condo sales are up from the previous quarter, what's interesting is that it's been primarily driven by mid-rise 5-6-story wood frame. This is an affordable built form to accommodate changing needs, as I mentioned earlier, and the demands respectively during the pandemic, as alluded to earlier. As we saw earlier, the sales again are driven by the same sub-areas. And then further reflection of the changing needs and demands are condo unit sales with dens, which is also interesting to know, and likely a result of the need for the work from home requirements. From the historical trend perspective, there's a potential for more condo completions, but as everyone can appreciate, this is likely, like everything else, subject to what happens with increasing cases that we're seeing in COVID and potential reintroduction of more stringent restrictions. To wrap it up, look, things to keep in mind, and in terms of hopefully helping you to navigate and provide a lens through the rest of this pandemic, it can basically summed up in saying that the primary fundamental drivers for the housing market look to be positive for the most part. In terms of what we're seeing today, with a bold underscore on with the COVID case count, this is obviously subject to change, as we've seen with anything, quite frankly, and anything can happen. Now, just looking at the key takeaways, we lost 2-3 months of supply and sale. 2-3 months of sales, but the pent-up demand, not just during the pandemic, but that was there pre-pandemic. In terms of the trending, we've seen the upwards in terms of sales will determine how quickly we can make this up. We've seen change in housing type preferences, not housing goals. That's another thing to keep in mind. And as restrictions loosen, we're seeing the pent-up demand from the pre-COVID come back to the market with the increased capital savings to go along with that. Supply and pricing challenges will continue to be prevalent, as they've always been, and even amplified potentially. The market reaction is generally consistent with underlying market challenges, but may be exacerbated in the medium term. Potential concerns that stem from the true impact of the pandemic government support and with the retraction of such support is yet to be seen. And then last but not least, the global factors like immigration, international students, economic growth and demand for exports will continue to be the key drivers. So with the positive outlook for a spring vaccine that provides a first light at the end of this pandemic tunnel that we've been in, hopefully some of this will help you to navigate in terms of having a lens until we get there. Well, thanks a lot. Back to you.
Jason, thank you very much for all this insightful data, and thank you for joining us from Toronto. I want to take a quick minute and announce a special promotion that we are conducting here at Habitat for the next 5 urban one-bedroom homes. What we're going to be doing is 2 things. One, we're going to be offering a $5,000 Realtor bonus for the next 5 urban one-bedrooms that we're going to be selling, and we're going to also introduce our 10% flex deposit program. And what that in essence is, it's a deposit where we will work with your buyer to find out a timeline that works for them between now and completion, and how we can spread their deposit over a few months, a few years in some instances. To get more information about that, you can reach out to myself, Elena, or Riley, or just give us a call. I will speak about that a little more after we hear from David Port. So I'd like to introduce David Port again. David, the stage is yours.
Thank you, Ben, and thank you, Jason. That was fantastic information that you've given us here. I learned a lot. That was terrific. So I'm just going to talk a little bit about our Habitat project, and I'm going to start with a question about the answer to the question, which is why are we moving ahead with all the backdrop that Jason had mentioned? Why did we decide to move ahead with this project? And towards the end of the summer, we sat down, myself with our partners at Fabric and Hudson, and said, what is our plan? And we made the decision to move into sales, and we made the decision to move into construction, which is going to start shortly. And there were 6 factors really that gave us the confidence that we looked at and said, why are we going to move ahead? So, number 1, great location. I'm going to drill into that a little bit in a moment. Number 2, great neighborhood. Being part of the Mount Pleasant and the greater area around Mount Pleasant is just a great community. And again, I'm going to drill into that one in a moment. We looked at this project and said, we're really focused here at Habitat on the local market, whether they're end users or investors. We're really focusing on the local market, and we felt really confident that market was still there and still interested in this location, interested in buying homes in this location. We looked at the supply, which was very low for new product in this area, particularly in the wood frame market. We have a great suite mix that we're really excited about. 80% of the homes are smaller homes, which leads to our 6th reason, which was we knew we would be at a really good, attractive price point. The combination of smaller homes and wood frame construction, that we could really set a nice price point that would really serve this local market and be available for local buyers really well. So those are sort of the 6 reasons why we decided to go forward, why we are going forward with the project with full confidence. I'm going to just drill into the location and neighborhood a little bit. Everybody might not know what's going on or all of what's going on. Certainly there's a subway lines coming. Everybody's well aware of that. So our project there on the map, you can see, is near transit. The Broadway line is going to get built. But the actual transit line itself is really only one small part of the transit story. The story that's more interesting, I think, for people that are going to be owning or living in this area is what's going to be happening around the transit line. And what's going to be, this is going to mean for future owners in this building, future residents of Habitat, and really of all the neighborhoods around the Broadway line. And the line itself is just one bit of the story. The more interesting part comes out of a map like this and some others that we'll show. So that in the green is really showing the areas that is going to see this positive impact from the installation of the subway line. So it's not just a thin strip along Broadway, and it's not just a few blocks. There's really a wide swath of the city, all the way from Commercial and Broadway out to UBC, that's going to see increasing in density. It's going to see increased retail. It's going to see increased office, increased residential, and all kinds of upgrades happening in that whole large area, which is really exciting. And that really is the location story, is what is going to be happening in this location. A lot of exciting things. We're already seeing small pieces, but so much more to come. I was going to make this one as a surprise. I gave the surprise too early, but anyways, you can see the surprise that I was going to say. Because I asked the question, if you had to guess, the next big employment generating area outside of the downtown, what would you say? And then I was going to show you the slide, and I would have said, well, probably people would have said, oh, it must be Metrotown, or probably Richmond's big, or maybe Coquitlam, that must be the next big area. The reality is, when you look at this slide, it's easy to see the Broadway corridor is a huge employment generator already. This is without a transit line. It's 2.5 times Richmond. It's almost 4 times Metrotown. And this is before any of this transit infrastructure has gone in. So it's really a regional town center. We don't think of Broadway that way. We think of it as just an area adjacent to downtown, but it is a real regional town center. Moving ahead to just show a little bit of what's along this Broadway area. And there's the Mount Pleasant, there's the Canby Village, there's Commercial Drive, there's all the West Broadway, all the West Point Gray area, UBC 4th Avenue. There's all these existing areas that are going to be enhanced, let alone what's not even on this slide, which is showing the City Hall, Vancouver General Hospital. All of a sudden, all these things are going to knit together, and all these areas that already exist just have a chance to be enhanced even more. It's really an exciting thing. And as I was saying, that the transit line itself is just one small piece. It's really everything that's going to happen around the transit is what's exciting. I'm going to talk about one other thing which is interesting is, where's the new cool stuff happening? So this map shows innovation areas. Let's call these sort of the hotspots of where things are happening in the city, the innovative technology areas. There's 3 that are right near our Habitat project, and right near the line, which is the Falls Creek Flats, which has the Emily Carr in it, Mount Pleasant, which is where I'm sitting right now. Some call it Mount Pixel. It's got a nickname because of all the technology companies that are here. And then there's the existing Broadway corridor. So these are 3 areas that are really seeing a lot of growth and activity already, that is just going to see more and more. A lot of it is technology driven, which is really a large part of where we see our economy going. And you don't have to just take it from me. The data always speaks for itself better than the presenter. And this is the actual data. Funnily enough, I have a data slide about data. So this heat map, let's call it, this is the clusters using business data. So this is tracking computer usage. So downtown, obviously red, like the hotspot, and then start seeing where the next hotspots of like heavy data usage. The one on the right-hand side, that's the Emily Carr, Falls Creek Flats area. And the one sort of in the middle that's not red yet, but kind of green turning to orange is Mount Pleasant. So, there's already the data, the use of data is the data I need to tell you that, this is where there's a lot of activity happening, the big spots outside of the downtown core. So just to sum up why we are moving ahead with Habitat, why we believe in the market here, why we believe in the location. We love the location. It's in a great neighborhood for the reasons that I've just touched on only briefly. There's so much more to learn about Mount Pleasant just to get on your feet and walk around. We really have this project to focus on the local market. We really are excited about the designs that have let us get some really nice size suites, nice size homes for people, and really get us into a nice price point that can really cater back that local market and a way for people to introduce themselves to the Mount Pleasant area. So thanks for a few minutes of just a little bit about the project. I'm going to pass it over to David Knight from Colliers, and he is going to share with us his insights and information on the commercial market. David, take it away.
Thanks, David. I think there's a common misconception out there in the market that all retail has been impacted by COVID. Certainly enclosed malls and fashion-heavy tenanted centers have been. However, grocery-anchored and walk-up retail that can be accessed via open air has performed well and been in high demand throughout the pandemic. So where has this demand been coming from a user perspective? Throughout the pandemic, well, we've seen a significant uptick in interest from pharmacies, small-scale grocery stores, quick-serve food operators, as well as medical users. Now, if you look at Habitat and our strata retail marketing efforts there, Habitat has been Mount Pleasant's most successful strata retail presale launch, with over 53% of the units sold within 10 days of the VIP launch. And a lot of that was driven by medical demand. Why has the project been so successful? A number of reasons. I think I hit on a few of them here. Well-designed units. All the units are under 2,000 square feet, which are in the highest demand from end users and tenants and command the highest lease rates and most capital appreciation. Mount Pleasant's the fastest growing neighborhood in Vancouver, with over 4,000 new residential units either under construction or nearing completion within 1 kilometer of the project. David talked on this and Jason as well earlier, but the Mount Pleasant Rapid Transit Station, we're making no further investments in Metro Vancouver and roads and highways, and if the Vancouver area is going to continue to grow, which it is, because it's a great place to live, rapid transit is going to have to be the main mode of transportation, and we're going to see tremendous hubs and growth on those nodes. Lots of excitement about and anticipation about the Broadway Corridor Plan, which is scheduled to be released by the City of Vancouver in March 2021. The plan is forecasted to bring a lot of growth and significantly more density to the area. So a lot of you may not have thought of Strata Retail as an investment product to pitch to your clients, but here's just a few key takeaways that you can take away and share with your clients. So all leases in retail are typically triple net. So that means that in addition to the basic rent, the tenant is also paying the operating costs, which are the strata fees, property taxes, and as well as utilities. So more net dollars in your pocket. Low tenant turnover. Most tenants in retail and commercial sign 5 or 10 year leases, and that makes the investment a lot more hands-off or carefree. Tenants make a large investment in the premises. So typically when you turn over the tenant or the unit to the tenant on completion, it's shell space. So the tenant's investing $200,000-$300,000 in improving the space. So not only does that improve the value of your asset, it also gives you security that they're going to be quite committed to making the business work at that location. Strata Retail is also not subject to any foreign buyer's tax, which is an important consideration in any investment, the taxation structure. And there's a limited supply of Strata Retail. Most developers only offer their retail components on a for-lease basis, not for sale, as they like to take advantage of the long-term capital appreciation themselves. And also, if you're working with small business owners, lease rates and mortgage payments have almost converged with low interest rates and increase in rental rates, especially in extremely popular areas like Mount Pleasant. Few case studies that you can share with your clients about recent projects we've worked on. So Gold House in Burnaby, this is a new mixed-use project at Beresford McKay, developed by Rise Alliance. It's within walking distance to the Metrotown SkyTrain station. 5 retail units there. We pre-sold them within 10 days. 2 of them were bought by an investor at around $1,100 a foot. Close to completion, she had reached out. She said, I would like to resell my units. We found an owner-occupier that was willing to pay $2,100 a foot. So very, very robust return for that investor in this particular instance. And that's just pure capital appreciation. Another example is at the MC2 project that we did at Southwest Marine Drive in Cambie. That was developed by Intercorp. That's within walking distance to the Marine Drive SkyTrain station. This is an instance where the investor bought it on a pre-sale basis, leased it to RBC at $65 per square foot net, which equates to about an 8% return on the pre-sale price of $800 a foot. So for context, if you were to go buy a second generation space tenanted by a bank or a very strong tenant, your cap rate would be in a 2 to 3% range. So almost a double return, given that the purchaser bought this on a pre-sale basis, and it's currently for sale right now at $2,200 a foot. So with that, over to Ben to chat a little bit more about the residential opportunities at Habitat.
Awesome, David. Thank you very much for that insightful information, and hopefully I'll be able to outshine your data with some interesting residential data. So what I'd like to do is I'd like to talk a little bit about Habitat success. If some of you do not know, we had a tremendous success by selling 50% of the project on our grand opening. And in today's landscape, that's not something that's a given. Maybe a few years ago, if you remember some of those sellouts, we have seen those and kind of took them for granted. But with COVID, taking in consideration all the market trends, we're very happy with that landmark. And there's a few reasons why we got to that landmark. It didn't happen by surprise. And what I want to do is I want to kind of dive in to what we have done to give David Port and the development team the confidence in pressing play and moving forward with that project. So I'm going to touch a little bit about these items. So the big thing is really that claims strength in the real estate market will lead to higher pre-sale demand. And that's basically the basic principle of supply and demand. What we've noticed is that the resale market has really gained momentum shortly after COVID. What that has given us is really the indication that there's going to be a need of more new product. And before we said, hey, let's move forward, we looked at what has happened in Mount Pleasant in the last 5 years. And interestingly enough, there's been only 7 brand new projects coming to the market with more or less 521 units, to be more precise, actually. Interestingly enough, if you look at Metrotown, one tower is almost 400 units. So if you look at Mount Pleasant, you look at the SkyTrain station coming in, you look at the growth in the area, you look at kind of how cool and hip the neighborhood is, and you're like, if you want to buy a brand new condo, there's only 521 in the last 5 years. That's not a lot. So when we looked at that data, we looked at where the resale market is. We thought, if I'm a buyer who's looking to buy a brand new product, there's really not a lot available. And that was the first line that gave us confidence of saying, David, let's move forward. So thanks for doing that, David. Before doing that, as I mentioned, we've been monitoring the market for the last 13 months because we feel that the cycle is not just a monthly cycle. We had to look at the big picture. And you'll notice that red column over there, that's really when the restrictions came into effect. This is where COVID hit us, and we saw a dramatic decrease in transactions. But interestingly enough, April, May, June came up, and we started seeing that slingshot effect that Jason spoke about earlier today. We started seeing the amount of transactions grow month after month. And with the amount of transactions, we also saw the pricing go up slowly, not big jumps like you've seen in the past, but steady increase in values. July, August were pretty active, as we saw, and then September came, and we had a team meeting, and we decided, all parties involved, that it's a good time to release the project to the market. So again, a lot of the things that we do in Framework is very data driven. We don't just decide to sell a project just because we feel it's a great time. We are very, very data driven. Now, I want to talk to you a little bit about what is it in Habitat, the project itself, that made us feel so confident. So the big thing is really the unit mix. We looked at what's trending in the market, and in Habitat, we're lucky enough to have a really, really attractive unit mix, where 80% of our homes were urban 1-bedrooms. Interestingly enough, when we looked at the amount of transactions in the last few months, and we really zoned in on what exactly is trending, we noticed that the majority of the transactions were between 400,000 and 700,000. And when we price Habitat, one of our biggest slogans was 40 homes under $599. So the majority of our product is located within that price gap of what's trading. So again, another indication, the data tells us there's a need for that product. We're like, we have that product. We're like, okay, great, rock and roll, let's move forward. So that was one thing. Now, I'm going to lift the screen and kind of show you what who's buying in Habitat. A lot of times developers will hold this information closely and be like, I won't tell you, but here you go. So 47%, almost half the buyers in our building are between 20 and 40. I would say the majority of them are first-time home buyers. I would say a lot of them are either living in their first home in Mount Pleasant and want to buy up into something newer. That was an interesting concept that we discovered. Another thing that was kind of surprising for us, because we didn't really aim our project towards investors, is almost 35% of our buyers are investors, which was pretty amazing to see. So we thought the investors are still going to be sitting on the sidelines waiting for the right time to come up, but they feel confident. The product offering was good, the unit mix was good, and they jumped right in. Then we looked a little bit about why are these guys buying. So at the end of each agreement, we had a really lovely conversation. Why did you buy in Habitat? And interestingly enough, the future SkyTrain station was the biggest selling feature to a lot of these buyers. So really quickly about what we're finding in this new landscape. There's higher interest. Buyers are more interested in smaller boutique buildings. We're seeing a shift in home features. Buyers are looking for interiors that have nice dens and workstations to spend more time at home. and larger outdoor spaces. Interesting enough, in Habitat, we have some really amazing homes with beautiful rooftop patios, and there's been a tremendous interest in those homes in particular. And then looking at the building amenities, the parcel delivery system, we all are familiar with a company named Amazon. The amount of consumer kind of trends on, I don't know how many of you guys are going into shops, but I would say online shopping is a big thing. So we're seeing that buyers are looking for these types of amenities, potentially co-working space, not having to go to the office, go into a dedicated co-working space that's in your building, and share outdoor spaces. Lastly, we can't forget price point. That was something that has been a very big driver to the success of Habitat. So really quickly, the special webinar promotion, what I want to announce to you, the next 5 urban 1-bedrooms, we're going to be offering $5,000 realtor bonus, and we will work with your client. We're doing a flat 10% deposit. We will work with your client on finding the best timing on spreading out the deposit. And then I think now is the time to, that's why everyone is so excited to join us, and I'm excited to give away this prize. So what we're going to do is there's a number in the bottom of the screen. It's don't do that yet. So it's November 19th. The 19th person to text this number with your name will be the lucky winner of a brand new iPhone 12. So I'm going to do a countdown. 3, 2, 1, and text away your number, 604-360-3103, and the 19th person will get to make a phone call out of a brand new iPhone 12. Thank you everyone for joining. It's been a pleasure having you. Thank you, Jason. Thank you, David Port, for the lovely opportunity. And thank you, David Knight, for all this insightful information. Habitat is open by appointment. Any questions, give us a call. Would love to see you. Take care, everyone. It's been a pleasure.
Thank you.
Thank you.
Thank you, everyone.
Thank you.
Thank you.
Here they come.